Hello, everyone, and welcome to week 12 of Coping with COVID. This is our weekly conversation and question and answer session about all sorts of things that are going on in the world, specifically related to the coronavirus pandemic and all of the financial support and struggles that are existing in this space. So thank you so much for joining us and for submitting all of the questions. This would be a very slow conversation if I did not have your questions via email to respond to. So thanks for that. I really appreciate it. Most of you know the drill by now, but make sure if you have any questions or if there's anything you want to make sure to add, use that chat box to go ahead and add your questions or comments. You may send messages privately to me if you'd like them to remain private, or you may share them with the group as a whole. I will keep an eye on that chat during today's webinar, and I will repeat any questions or any comments to the group so they're captured in the recording. Of course, this is being recorded, and a handful of people will be listening to this later. So thanks for listening in and all of your questions in advance as well. For those of you that don't know me, my name's Elaine. I am a CPA and the luckiest CPA ever because I get to hang out with creative individuals and organizations and help them with the business side of their creativity. There are lots and lots of great groups I have the privilege of working with. Many are on the screen, and many of them are how I found many of you or how you found me. So thanks for hanging out and continuing these conversations. All of these conversations are educational in nature. They are not meant to be relied upon for tax, legal, or accounting advice. And you probably knew that because we've been doing this a while. But also it's in part because these laws and rules are changing pretty regularly as additional guidance is being released. So it's important that you're staying on top of this, and also important that you're working with individuals who know all of the details of your own financial situation. So today we'll be reviewing some questions that came in. More specifically, we'll talk about PPP forgiveness. There is a tool that was released by the AICPA that I want to walk you through. It's pretty fantastic. We'll also talk about a couple of unemployment updates. There were one or two questions about unemployment that came through, including one about how if you applied for unemployment and PPP and then accidentally received both, what does that look like? So we'll talk through some of those nuances and details, and then two extra questions that came through as well. So as a reminder, PPP was the loan program that many self-employed individuals were able to apply for, and this extended forgivable loans to individuals, small business owners, and now that many people have received their funding or received their loans, as you are spending them, which you can do during now a 24-week period, although you self-employed individuals can still only pay yourself 8 weeks worth of net self-employment income on that. But as you finish expending these funds on your rent or utilities or your payroll, then you will be applying for forgiveness, right? So that means you borrowed the money, it was originally recorded as a loan, and now you are applying to make that loan forgivable, meaning that you do not have to pay it back, which is a pretty good deal. The Small Business Administration has published a link to the forgiveness application. Your lender may have their own version of this, but you can certainly go ahead and use the application that's on the Small Business Administration's website, and I have the link here on the screen. The application itself is a little tricky. There are not a ton of pages, but there are a lot of pages, and you have to kind of go back and forth between some different schedules. So take your time as you're filling this out. It's not exactly a super simple process, and you want to make sure you're doing it right. Also, I will share with you something I heard on a webinar last week. The expert that was talking about this program was encouraging people to not rush to go through this forgiveness process. And I thought that was interesting. If you have already expended all of your PPP funds, that's okay. You can go ahead and apply for forgiveness if your lender is accepting those applications yet, but there's not a huge rush. Your loan is accruing interest, but it's at a pretty low rate, 1% over a year or so. So you may want to wait until there's additional guidance or additional clarity that's coming out on some of these things, right? There's not the same kind of urgency to apply for forgiveness that there was to apply for PPP funds in the first place. And speaking of applying for PPP funds in the first place, the amounts that have been dispersed for the program have kind of leveled off. There are not nearly as many new applications going in right now for PPP funding. And there's still, I think, about $130 billion left in the pool of available funding. So if you are someone that maybe didn't really think you had a need a couple of months ago, but maybe now things have changed, you can still apply for PPP funding through the end of June. The deadline to apply is June 30th. I would caution you though, I did a quick little anecdotal research this morning, and at least two financial institutions in my area, Columbus, Ohio, one credit union and one national bank, both said when I reached someone to talk to that they were not accepting any applications anymore, even though there was still federal funding available. So it may take some time to sort of dig in and find a partner to apply for. But if you are someone that has not yet applied and you're thinking about it, definitely go ahead and apply by June 30th because that's your deadline. And now, luckily, if you're filling out your application for the first time, you now know exactly what is going to be forgivable, so you can make sure you're not borrowing more than that amount. So the AICPA, which is the American Institute of Certified Public Accountants, which is a group I've been involved with since I was an accounting student in college, released this, I'm going to call it a fantastic tool. I think maybe only accountants think it's fantastic because it is a glorified Excel workbook. But what's really, really nice about this is that it basically replicates the forgiveness application in an Excel workbook, and it has color-coded cells so that you can type in your own information into these certain cells, and then the formulas kind of flow all the way through. So I have a link to the tool up here on the screen. It's called the PPP Loan Forgiveness Calculator, and it's an Excel workbook that you can download from the AICPA's website. I haven't tested to see if it works in numbers, but it probably does. If you are a Google Sheets user, you may be able to sort of copy and paste some of it into Google Sheets, but it might be a little less user-friendly. But this is a pretty good resource, and what I'm thinking about is next week, we'll spend our time kind of walking through the tool in detail. I want to give you a quick preview of it today. You should be able to see this on my screen. It is an Excel workbook, and it's got the logo at the top, and this first tab has some instructions about kind of how the workbook works. There's a lot of data here and a lot of information here, but you do need to go ahead and read through it and be patient and take your time and all that. What you need to know is that the blue cells are the ones you can type in, so that's where you're going to want to focus. The next tab takes you through kind of the first page of the forgiveness application. You'll see at the very beginning it asks for the loan disbursement date. So when did you get your PPP funds? And then what is the payroll period you're covering with them? So you want to enter both of those dates as well. And then it asks you how much interest has accrued on your PPP loan as of this moment. You can estimate that amount in whatever way kind of makes sense for you. Your loan probably is carrying a 1% interest rate, and that's calculated annually. And then down here on line 9, it actually asks for your PPP loan amount. So you would type that number in there. I'm skipping all these green cells because they are just calculation cells, and they are calculated based on the information you fill in later. There's a lot going on here, but this first page is where you kind of put some of the key information. When did you get the money and how much did you get? And then it'll tell you, after you answer all the rest of the questions, how much of your loan is forgivable, and then if there is still a balance, what that balance will be. You want to kind of keep your eye on this, because if you are someone who applied for PPP funding planning to have it all forgiven, if there is still a remaining loan balance, you're going to want to make sure you're paying that off as soon as possible so that it's not accruing additional interest. That's going to be the bit that is not forgivable to you, if any. My hope is that most of you will be totally fine and not have to worry about paying any of the loans back, but you know, your situation might vary. Schedule A here is the next tab. This is where it's talking about the number of full-time employees you had, that's pulled in from a different tab. And then it's also asking if you had employees, if you are using any payroll costs associated with their health insurance or their retirement plans. Most of the self-employed individuals I'm working with don't have other employees, or if they do, they're not contributing to retirement plans or health insurance for them. So this section will probably be blank for many of you. The next sheet is for Schedule A worksheet, not to be confused with Schedule A, and this is where you enter your average full-time employees. The sheet after that is where you enter all of the expenses that you paid with your PPP funds. So in this version of the workbook, this is from June 2nd. So that was before PPP forgiveness legislation extended the amount of time that you could spend these funds, right? So now you have 24 weeks. This calculator is still showing that you just have 8 weeks. I am certain the AICPA is going to be updating this calculator at some point. As of Friday, they hadn't updated it yet, but that's okay. You can still get started and use this a little bit, but do know that you have a little bit more time to spend funds on rent or utilities, if that makes sense for you. So here you would enter the business rent or lease payments for your studio or your office space, and you would enter them in the week that you paid them. So in this example here, this person paid $250 at the beginning of July, and then they'll pay another $250 at the beginning of August, right? We also have utility payments down here. This can include electricity, gas, water, internet expenses, if you have them for your rented office space or studio space, that's something you would want to enter here as well. And then the next tab is where you put those payroll expenses. Now, if you do have employees, right, you definitely want to pay attention to the first 70 or so lines of this tab. This is all this data here. If you are only self-employed though, you want to scroll all the way down to this section that says compensation paid to owners, because that's the part that you're going to care about, right? And here is where you enter the actual amount you are paying yourself, right? And then we have this limiter for the maximum amount you are allowed to pay yourself. Now, this isn't automatically calculated. You definitely have to do this math yourself. But as we've talked about, the amount you are allowed to pay yourself is your amount from line 31 on your Schedule C from 2019 divided by 52 weeks times 8. So you basically get your average weekly net income amount from last year, multiply that amount times 8 because you are allowed to pay yourself for 8 weeks during this PPP period. And then that's the maximum amount you can pay yourself. And so if you're sort of planning your expenses carefully, my advice would be to make sure what you are paying yourself is not more than what you are allowed to pay yourself, which I know for many of you is creating a little bit of a mismatch. Because remember, you applied for funding based on a monthly amount, but forgiveness is based on a weekly amount. So the math behind that gets you an error of about 1/78 or so of your total Schedule C from 2019, which is really annoying. Now, my hope is that you can maximize what you're paying yourself. And now that you have some additional time to spend those extra funds on your rent or utility payments for your business, hopefully those can absorb some of the extra little bit of your funds so that the entire loan still ends up being forgivable. The last tab here is where you enter your full-time employment numbers, as I mentioned earlier. Remember, part of this is you wanted to make sure you were maintaining the same employment level before you received funding and after you received funding. That doesn't apply for most self-employed individuals, but it is a big deal for an arts organization or another company that maybe was trying to retain their workers during this period. So you enter all of that information and then you come back to this PPP forgiveness calculator tab, and it will tell you how much of your loan is forgivable. So then you can print off each of these pages, or you can just take this and sort of match the numbers to your paper application if you want to do that. And then in theory, that should make this process a little bit easier for you. If you are someone who hates Excel, it probably won't make it easier at all. It'll probably make it worse, because this is like Excel of the Excel workbooks, right? There's a lot going on there. But if you're struggling with it, if you need some help, definitely let me know, and we can spend some time or even look at your own numbers and see what that might look like. So the TLDR version is, there's an Excel workbook that you can use from the AICPA that can help you sort of know where things are going on the forgiveness application, and there are some calculations that can help you carry through those numbers. We had an interesting question come in from someone who shared that they applied for PPP and received $4,000, which is fantastic. But then before that, they applied for unemployment, right? And so their application for unemployment was kind of languishing in their state system. They received and accepted the PPP, and then unexpectedly, unemployment money started showing up in their bank account as well. So as you probably know, one of the conditions of PPP is that you would retain your employees, which means you cannot have PPP funding that you're using for the same weeks as your unemployment. Now, what's kind of interesting about this, and I will probably recycle this question in a couple weeks when we have some additional guidance, is what this person essentially needs to do is look on a week-by-week basis and sort of map out where their income is coming from during those weeks, right? So they didn't share what the first day was that they applied for unemployment, but they say it was about 2 months ago. So that was maybe probably April 15th-ish, maybe in the middle of April, they applied for unemployment. So let's pretend April 15th was the first day they were officially unemployed. And then they also applied for PPP funding. If they received their PPP funding on, say, June 1st, right, then you can use the 2 weeks in April from the 15th through the end of the month, and then all the weeks in May, you can use those as unemployment weeks, right? So you would then receive unemployment benefits for all of those weeks, including that extra $600 pandemic unemployment assistance program. Then when you received your PPP funding, all of a sudden now you are receiving PPP funding in a lump sum and basically paying yourself for the next 8 weeks or so, right? So for those weeks, you would not claim unemployment, and you would report your PPP funding that you were receiving on those weekly vouchers from unemployment. What's kind of weird about this person's situation, and this might actually apply to many of you, is that both of these applications were kind of in the works. So by the time they received unemployment, right, that might include a back payment that then has some overlap with the PPP funding, right? I know some of you live in states where you have to start reporting your vouchers immediately after you apply for unemployment, even if you haven't gotten it yet. So this shouldn't be an issue in those states. But in other states where you only start reporting the vouchers after you've received funding, there could create a little bit of a mismatch. But what I would do is I would sit down with a calendar, either a printed one or one online or something, and just basically mark off for your own sanity, okay, this is a PPP week, this is when I'm paying myself with PPP funding, and do that for 8 weeks, starting with the week that you received the PPP funding. And then all of the other weeks, I would mark them as unemployment weeks. And then that way, you're able to sort of reconcile for yourself, okay, I'm not getting these benefits during the same week. I'm either getting unemployment or PPP. And then at the end, when you're sort of doing the math and reconciling everything, it is possible that if you received unemployment in a week when you also received PPP funding, your state's Department of Labor or Workforce Development or whatever your unemployment office is may ask that you pay back that unemployment that essentially you were overpaid for, right? Because you had PPP money during that same week. That's a little confusing, right? And a little bit of a mess, but I think the responsibility is going to fall on the individuals to be able to track and show that they did not receive PPP and unemployment in the same week, which probably means sitting down with a calendar and just making sure you're clear on where the dollars are coming from in a given week. I will say one extra thing about this, and this is why I'm probably going to recycle this question in a couple weeks. Because the PPP forgiveness legislation extended the time that you can use your PPP funding, right? It makes me think that it's possible that you receive your PPP funding maybe on June 1st, but maybe because you're still receiving unemployment, right, during that time period, maybe you decide, okay, I'm not going to spend PPP money until, say, August 1st, because that's when my unemployment will end, or that's a really good time when I'm going to need to draw upon the PPP funds. We don't have a lot of guidance about how much self-employed individuals can move that 8-week period within the overall 24-week period, but it could, in theory, be possible for someone to have unemployment through, say, the end of July, and then use their PPP funds for August and September, right? So I'm going to pay attention for more guidance on this. We know that if you have employees, you can shift your covered payroll period by a couple of weeks to align with your payroll, right? But we're waiting for a little bit of extra guidance about how self-employed people would calculate their 8 weeks within that 24-week period. That was probably really confusing and technical, so I apologize for that lengthy explanation, but the short version of this is stay tuned because there might be some tweaks to this, and also make sure you're just clear on where you're counting your income from, whether it is unemployment or PPP in each given week, so that at the end you can make sure you're not receiving too much in unemployment benefits. Another question that came in, and this came in from an individual who sent it via email, but it also came in from a totally separate person at the end of last week, was some confusion around these weekly vouchers for unemployment. And this is tough because many self-employed individuals have never really been part of this unemployment system before. So it can be really confusing to fill out the weekly voucher. And some states make it super, super simple, and other states make it quite a bit more challenging. But what I would suggest for the two individuals that both raised this question, they were both based in Indiana, which makes me sort of believe that maybe Indiana's voucher system is especially confusing. But there is a great tutorial from Indiana's Department of Workforce Development, and it's linked here, that basically walks you through all of the different questions you have to answer as part of this process. What I think I can tell from going through this tutorial is that when you're completing the weekly voucher or the weekly certification in Indiana, it's also asking you to reconfirm some of your employment history. And so that's at least one point that's kind of tripping people up a little bit, because that seems a little unnecessary since they already have that, but there it is. So my suggestion would be keep track of what you're entering on a weekly basis, whether that is, taking screen grabs of what you're entering into the system, or maybe you open up a separate word processing document or a Google Sheet or something just to kind of note what the answers you were entering to all of these questions are, so that when you're answering them all again next week, it's a little bit easier to just keep putting in consistent information. The other quirk on Indiana's system, and it's probably coming up in other systems too, is they're asking how much you're earning in a given week, which is not surprising. In every state, you have to report any earnings you have. But in Indiana, they ask you to specifically report earnings you have from self-employment. So this would be if you're a musician and you're doing a gig, or if you are a painter and you're selling a work, or you're a musician and you're teaching a class or something. Those are all the sort of self-employment incomes you would have to report on a weekly basis. And in Indiana, at least, you have to first add yourself as an employer, and then you'll be able to choose yourself so that you can report employment from yourself, which essentially means your self-employment income. So that's a little bit of a weird quirk. Now, the good news is that's explained with some screenshots in this guide from Indiana's Department of Workforce Development, but it is a little wonky. So give yourself plenty of time to kind of work through that slowly and make a note of all of the answers you're putting in so that next week when you're recertifying, it's going to be a little bit easier. Another question that came in, which to me speaks to the optimism of this industry, is that this person has been doing a lot of online engagement with various musicians, some collaborations, and getting some really great attention surrounding these efforts. So the question is, do I know of any good resources to point you to for some social media or marketing strategies? And those of you that know me well know that I am no social media expert. It is something that I am not good at all. So I love the idea of hiring someone or doing some sort of trade with someone to manage social media if you are not someone who's into it at all. If you do want to sort of manage it yourself, there are some great trainings and resources available through Americans for the Arts and through different state arts agencies, kind of around this idea of marketing or managing your brand or engaging with other individuals. And they really are some pretty great tutorials. The strategies that I have heard that tend to be effective are a couple. Number one, make sure you're kind of scheduling what your content is going to be on social media. So maybe that looks like a calendar, maybe it's a list of things that you want to post, right? Maybe it is just different ideas that you have, but it's easy to kind of fall behind or forget about social media or continuing that engagement when there are so many other things to do. So if you have some sort of plan or some sort of content calendar, that can be a really helpful resource to help you kind of plan out when you are going to be selling something or kind of promoting something you're doing, and when you're going to be sharing useful tips or just in general engaging with individuals. And then when it comes to, in general, engaging with individuals, I think it's crucial to remember and understand that social media is a conversation, right? There's a back and forth. It is not effective when it is simply a platform for you to push out content. It really does need to be a responsive, engaging, back and forth conversation. So that probably means you're scheduling some time in your calendar to make sure you are engaging regularly. I know there is pressure to always respond immediately. And sometimes, especially if we're kind of just starting out, that's an important thing to do. But if you could also carve out, say, 15 minutes 4 times a day, just to kind of check in, that is a way to make sure you're not letting too much time go by before you're responding, but you're also not having your phone or other devices sort of incessantly dinging you so that you can't get anything else done. So I think making sure you're scheduling time for engagement, planning out your content, and then kind of just paying attention to some best practices and resources is probably a great strategy. In terms of other tools, I know some individuals love using Hootsuite. That's Hoot, H-O-O-T, like an owl, Suite, S-U-I-T-E. That's a platform where you can schedule out posts on different social media channels. So that can be an efficient way to kind of monitor things. I think Google Analytics has some fantastic tools that you can use to start sort of paying attention to things. And then if you're looking to push content into individuals' inboxes, MailChimp or Constant Contact tend to be good platforms for that. And ultimately what you want to do is just kind of understand how you want to be having the conversations, understanding who you're engaging with on these different platforms, and then building a strategy with intention that kind of makes sense for you, and then paying attention to kind of what's working and what feels good. And then at some point when it makes sense to do that, maybe thinking about somebody else to come on and manage some of those channels for you. Okay, another question that came in was about wills and trusts, which admittedly is not my core area of expertise, but I did still want to address the question. This person shared they had a will made or made a will several years ago, and then recently heard that they needed a trust as well. So their question is, what should I think about as I am navigating the differences between these two things? Um, so I think if we were to step back for just a second, a will decides what is going to happen with your stuff after you die, right? And then a trust is somewhere where you can put your stuff, like your assets or your properties, while you are still alive, right? And so you can be the owner of the trust or the beneficiary of the trust. And it's basically just an extension of you, the human, while you are still alive. But if you become incapacitated, so you can no longer take care of yourself, or maybe you're disabled, maybe you're mentally incapacitated, if you name a successor beneficiary to your trust, that means if you become incapacitated, that successor beneficiary can then manage all of your assets while you are still alive. There are also some nuances around whether or not your estate goes into probate after you die, and whether or not you want your will to be made public and all of those things. So if you have some concerns about that, a trust is a way to kind of get around that. But you certainly don't have to have a trust, I don't believe. Although lots of people think it's a really good idea. So here are the things I would think about. Definitely, if you have children or any dependents or anyone else who you are providing care for, you want to make sure you have a will that specifies guardianship of those individuals after you pass away, right? So that's not something you can control through a trust. So definitely, if you have children or others that you are caring for, make sure you're providing for their care afterwards. Then if you're thinking about a trust, what you want to think about is probably a revocable living trust. The living part means it's in effect while you are still alive, and the revocable part means you can change it at any time. So you can rename beneficiaries, you can change what happens with the assets, all of those different things. That gives you the most amount of flexibility. You do want to make sure that you are remembering that a trust is a legal entity. So you want to make sure you are clearly aware of any of the tax filing obligations that the trust might have. And that seems kind of insane, but many of you are individuals that own LLCs. If you think about an LLC as being a separate legal entity, right, it's easy to see that, oh yeah, that might have a tax filing obligation. And if you are the only owner of the LLC, we know that all of the LLC's activity is reported on your own tax form. The same is true, more or less, if you have a revocable living trust and you're the only beneficiary, right? It's basically treated as an extension of yourself, except with this separate structure. But if you have a separate identification number for the trust, or if you do become incapacitated, so your successor beneficiary takes over, then there will be an ongoing tax filing obligation for the trust. So make sure you're sort of aware that that is something that you need to kind of pay attention to. If you're saying, nope, don't want to worry about this, it is worth noting as well that a power of attorney or a healthcare power of attorney can help you document some of your wishes as well in case you do become incapacitated. Those are more providing directives for care and appointing the person that's going to be making decisions on your behalf. And they're less about kind of the assets, more about who's going to be making decisions on your behalf. The trust is a place to sort of hold the assets and then have that successor beneficiary be able to take over those assets in the event that you do become incapacitated. My big picture advice and takeaway, though, would be if you've got a will, you probably had an attorney prepare that. that's someone you want to maybe go back to, especially if you liked them, to have a conversation about what this revocable living trust would look like and whether it is something that makes sense for you given your level of assets and the other individuals in your life. A financial advisor could probably help with this as well. My suggestion would be I wouldn't do something like this through a free legal website or something like this. This is a moment where you do want to be having a conversation with another human so that you can make sure you're understanding all the nuances of these different options. And again, the best human to start with is one that you may already know. So if you were in touch with an attorney who prepared and filed your will, that's maybe not a bad place to start. I'll also share as well that Volunteer Lawyers for the Arts has some pretty great resources when it comes to things like this. And the Joan Mitchell Foundation worked with Volunteer Lawyers for the Arts to put together sort of an end of life care type of process for creative individuals. It was mostly focused on visual artists because that's who Joan Mitchell Foundation primarily serves, but it's still a really great resource. So poking around either Volunteer Lawyers for the Arts website out of Greater Boston or the Joan Mitchell Foundation's website to get your hand on some of those resources could also help give you some extra information. Okay, so those are the only questions that had come in this week in anticipation of today. Just to recap, we definitely talked about PPP and the forgiveness legislation and that new tool that has come out from the AICPA, and then covered a couple of quick questions. I do see one or two or three things coming through the chat, so let me take a quick glance on those, and then I'll go ahead and address those questions as well. Okay, the first question is someone thought that if they paid federal and state taxes that Social Security was withheld automatically within that, but they have since read that you need to do Social Security separately. This person is self-employed. They don't have a company set up. They pay taxes as an individual. And the question is, what should they be doing to ensure they are receiving the same Social Security and Medicare benefit in the future that other people are getting? This is a fantastic question. And it's really, really confusing because if you are self-employed, you are paying self-employment taxes, which basically approximates your obligation for Social Security and Medicare. What's interesting about that, though, is that it's not always super obvious where those dollars are going. So what I would say is get a hold of your most recent tax form. There will probably be a schedule in there that shows the amount of self-employment tax you're paying. Get a hold of that and have it handy. And then go to, I believe it's ssa.gov, and then see what your estimate of benefits may be. It is possible that you are not earning any income that is paying into the Social Security system, but it's also possible that you are, kind of based on how things are flowing. So I would say first, let's just get a picture or a snapshot of where you are and what sort of benefits have accumulated for you in the Social Security system, and then we can go from there. So that's where I would start. Get some data, and then we'll dig into it a little bit deeper. Another question in the chat, this person's question is about reporting income for unemployment in Ohio. So each week it asks about your net wages for the week. And then this person is giving some extra information. For 2019, they reported about $8,000 in wages from a W-2 job and about $19,000 in self-employment income. So that was $43,000 of sales minus $24,000 of expenses. So their PUA benefit was calculated based on those two amounts, divided by the weeks worked, delightful, divided by 2. So in Ohio, you're getting $259 a week. To report weekly net wages, you needed a weekly expense number. So you took expenses from last year and divided it by 52 weeks, okay? And then each week they take the sales I've made minus the weekly expenses, and then they've reported any remaining income. But for a week where they haven't sold the amount that they would have sold on average, the number is negative, so they report no earnings. Does that sound like the right thing to do? What a fantastic question. So my understanding of these weekly certifications in Ohio and in all the other states is that they're asking you not necessarily to report expenses or average expenses based on last year, but rather to report actual income you've earned minus your actual self-employment expenses. So for example, let's pretend you sold one thing during a week, and maybe you know that the costs that went into that were 50% of the selling price, so you would report the selling price minus the cost that went into it. So that would be how you would do it on a weekly basis. I don't think necessarily you need to worry about subtracting your overall average expenses based on last year. The one exception could be if they are almost exactly the same of where you are right now. That's not a terrible way to do it. And certainly I can dig into this and make sure, but I don't think you're committing unemployment fraud or anything for sure. So you're probably totally fine there. But I would suggest that maybe doing actual income and expenses is a better way to do it. But I'm going to follow up on that and dig into it a little bit more deeply. But for purposes of this next week, stick with your system and then we'll follow up. Another question that came through in the chat, this is another voucher question. The process is still being processed, but this person doesn't think they've been approved for unemployment yet, okay? But the website has a weekly list of vouchers for you to fill in, and it goes back to March 13th when this person first lost their main contract. So this person still has some minor work, so basically they just have to look at when they got a check and then report that week amount. Kind of. This is such a good question, and this is such a messy process. And I thank you so much for asking these questions so that we can kind of clarify the answers. This person is from Indiana. So in Indiana and in most states, they don't care about when you got the check for the work you did. They care about when you earned the money from the work you did, right? So let's pretend, starting on March 13th, your main contract got canceled. And so for those first couple of weeks, maybe you didn't really do anything, right? You would have had zero earnings for those first couple of weeks. But maybe then you got another small contract, right? And maybe you did, say, $250 worth of work in, week 4 or something like that. At the end of week 4, maybe you sent an invoice to that client, but maybe they didn't pay you until week 7, 8, 9, right? So you would report that $250 of earnings in the week you did the work. So essentially, when you had the right to receive the income, right? Not necessarily when you got the cash. And this is really confusing because from a cash perspective, you need the cash, right? So if you're doing work, but you're not getting paid for it for a while, you need the cash. So my suggestion would be, to the extent possible, do your best to estimate the amount of earnings you had in a week based on the work you actually did, not necessarily based on when you got the cash. And this person is absolutely right. When it comes to those vouchers in Indiana, they do want you to start reporting those vouchers immediately when you become unemployed, even if your unemployment hasn't yet been approved. So a little messy, a little wonky, but that's a great question. Okay. Costs, another question. What about costs that aren't associated with the sale, like studio rent or show application fees? This is going back to the idea of, in Ohio, you're reporting your net wages during the week. And this is a really good question. I don't know that those are necessarily captured in the unemployment calculation in Ohio for those weekly certifications. I know those overhead costs are captured when you're doing the math to apply for unemployment, but I don't think those are captured in your weekly certifications of how much you earned, which is an interesting thing to kind of dig into. And it's probably a result of unemployment not necessarily existing for individuals who have overhead costs, right? Because the unemployment system wasn't necessarily built for self-employed individuals. It was built for someone who was receiving some sort of paycheck, right? Which is pretty easy to report in this weekly voucher system. And yeah, this person is sharing that the net wages amount that they're asking for is really confusing because that is the same verbiage that they were using to look at that net income number for 2019. And yeah, there are direct costs and indirect costs associated with everything that you're doing. So here's another sort of final point I'll make on this. And I will say you've done a really, really good job, even just within this chat, explaining why you're reporting what you're reporting and the reasoning behind it. Which means if there are ever any questions that come up, you can point to this explanation, right? Even copying and pasting it from the chat, since you've already typed it out, you can point to it and say, in the absence of other guidance, I relied on this calculation, which I did with my best faith effort based on net wages that you were asking for. So I think you are in a really good position to say, hey, there wasn't guidance from this that I could find. Here's what I did. Here's why I did it. And this is my best faith effort to comply with what you're asking for. And that I think is pretty powerful because you are clearly going through a very systematic process to try to answer exactly what they're asking you, which means counting those indirect expenses as well. So I think you're probably going to be just fine. And you're right, it is super, super confusing. So if it's okay with you, I will just kind of dig into it and see if I can find out any additional information that might be clarifying. But I really do like the process you're following. Other questions in the chat. I'm going to take a quick peek just to make sure I didn't miss anything. Couple private messages. Thank you. It's lovely to see you all as well. And okay, I think that's it. I'm not seeing any additional questions in the chat. Per usual, it has been lovely seeing so many of you today. Thank you for the questions and your communications and your perseverance because it's kind of tough right now, and I get that. If you are looking for a ray of hope, I saw a breaking news alert that the Supreme Court upheld protections for LGBTQIA workers, which is pretty fantastic, which means individuals can no longer be fired in the United States for who they are or who they love. So it is now the time when the Supreme Court is going to be releasing a whole lot of decisions. So hopefully there will be a whole lot of good news coming out in the not too distant future. And yeah, I think this is a moment where we can grab onto all the good news we can get. It has been wonderful, wonderful seeing all of you. Thank you for everything you are doing. Thank you for raising your voices. Thank you for protesting. Thank you for advocating for things that are really important to our country right now. And I will look forward to seeing you all again very soon. Have a great one.